Face of Terra Luna Classic is about to change, and I think people are starting to wake up for it. We've seen some nice price action over the last 24 hours, and our volume is going up. We have Binance burns, and ultimately we don't have what we want, which is every exchange holding the 1.2% burn tax. And I think the great thing with Terra Luna Classic is we evolve, we think about it, we move, and we move as a community. And this video is all about how we are changing, and more importantly, an in-depth look at the Zaradar proposal. And I think it's really interesting. You definitely want to hang around for that. So make sure you subscribe to the channel, turn that notification bell on. Also, leave a like on this video if you are bullish on Luna Classic. And let's dive into it. So we got this, as promised, the proposal from Tobias Anderson on the back of the Terra Classic USTC repeg. Now, I did a bit of a video earlier that talked a little bit about what's coming, the burns, and a few other things coming down the pipeline. But this specifically is about the repegging of USTC. Now, it is a real bone of contention. Do we want to do it? Do we not? Do we bring in USTD? USTM? What is it that we are really going to do? But this, for me, really breaks it down into a number of different sections. And we're going to walk through some of these and give you my thoughts and my views and try and really bring it in a simple format. I don't know how long this video is going to be. I hope that we're going to be under the sort of 8-9 minute mark, because I do think that it can be very technical, and ultimately there are a few points that are just important as retail investors that I think we need to know. And equally, we need to just understand a little bit the technical side of it. Well, we need to leave that up to the guys that do it at the Terra Rebel. So, Terra Classic USTC repeg proposal. Now, I'm not going to run through this first bit. Talks a little bit about Zaradar being, I'm close to 8 years I've spent in crypto. I've yet to come across a more vibrant, emotional, and diverse flock of people as committed to their cause as the lunatics. And we've talked about that on a number of videos, that actually the community that sits underneath Terra Luna Classic is something else. It really is. You know, you guys have shown immense support on this channel, along with loads of other people. And I think ultimately we're in it together. We are all holding the bag, and we do believe that there is something special with Terra Luna Classic. It's going to be one of those that goes down in the history books. Now, I'm going to talk a little bit. You can see some of this I've highlighted as we kind of work through it. So it says the bailout USTC via quantitative easing, and ultimately it's defined as it leads us to the temptation of pursuing the philosophies of quantitative easing, which has historically been the magic fix for most modern economies in the last few decades. QE can be applied in many ways, and countries such as Japan has taken it to the extreme in ways that are most likely contributed to the significant growth in commodities and cryptocurrency. Highlights it brilliantly here. Turn the money printer on. We've just seen it in the UK, where the banks had to step in and basically go and buy bonds. Otherwise, the pension funds were going to walk away. Now, that isn't the same for cryptocurrency, but ultimately what we are doing is printing more. In this case, we would be printing Luna Classic in order to ease that deficit. It says during the last bull market, retail investors fled their local market in favor of inflation-resistant assets, while the central banks gobbled up 430 billion worth of equities without much to show for it. Again, that's generally what happens, and what we don't want to do is this. For me, this is not the route through this. You know, minting more is probably the biggest concern people have when they think of Terra Luna Classic. It says to further compound the problem of applying QE strategies, we have a 10 billion debt mounting, waiting to tear down any bull run, with an avalanche of speculative mercenary capital, which is patiently awaiting the repeg of USTC. What's that? That's people that have lost significant amounts of money, but are still holding USTC to the sum of $10 billion. So if you think about the instant repeg by just printing it, all that would happen is all those people that want to get out would just sell, and we would end up in exactly the same space. There's additional measures were put in place to artificially reduce the USTC supply, which could be accomplished via a successful governance vote, and even if passed, the result will most likely be challenged legally in a court of law, dragging out the process for years to come. So it's really important that actually printing money in this situation is not the route forward. Now, path 2 feels a bit more sensible. Path 2 takes on a much more painful journey that includes trials such as austerity in the form of burn taxes, interest rate increases on staking rewards, and by lowering the reward weight in exchange for increased lockup periods, e.g. 90 days, a massive effort of recapitulation. Terra and Luna pools via sweat equity, and partition pools, in essence, a form of quantitative tightening of our primary M2 money supply, and would lead to significant reductions in circulating supply of both USTC and LUNC, while putting both value networks on sustainable paths to lasting economic recovery. What does that mean? Well, ultimately, what we've got now, the burning of Luna Classic, equally making people lock their tokens up for longer, but increasing the rewards and making people use the blockchain more. Ultimately, that's what it means, but it will take longer. We will have bigger dips. People would obviously, lose interest. So it is going to be a longer part, but probably more sustainable and economically probably makes more sense. It says, combined with a razor-sharp focus on attracting fresh capital to the Terra and Luna pools via increased end-use utility and rewards on staking, that coupled with a bump in the undelegation period will ensure more predictable liquid flows to the network. Ultimately, if you can lock your tokens away for longer and benefit from higher rewards, and I think we can see that over 10% was staked, really quickly, then this is what it's about, bringing more money, more, capital into the Terra ecosystem. It says, the attractive environment for new businesses set up shop, guaranteed that we can provide them with functional volatility guards that can allow their fledgling business models to mature and become self-sustaining economic engines that over time can help erode the debt mounting, supporting, burning, using the network, all of those good things as part of it. So to enable such a reality, we will need to implement a new on-chain feature called partition pools, which will allow dApps to dynamically create their own nested capital partitions inside the Terra pool by paying a Luna-based fee to the platform. So each individual dApp would have their own partition pool. It says to keep the partition pool stable while allowing capital interoperability, dedicated remittance corridors would be established and monitored by the ABS keeper, which would throttle liquidity flows out of partition pools to ensure that it does not exceed certain percentage of the overall liquidity in the Terra Luna pools. Important to allow and make sure we still have a healthy level of liquidity to support if anything was to go wrong. I think a lot of these rebuild strategies are if anything goes wrong, but ultimately decentralized applications that build on Terra Luna Classic would have their own liquidity pool, which I think is important. It says, while implementing a QE strategy does have the ability to create a short-term growth cycle, it will most likely not be sustainable medium to long-term due to the waste oversupply of Lunic. One could try to avoid this scenario by accelerating investment into growing on-chain utility, and I think that ultimately is the biggest thing with the lower risk. It says, by now, wise man will probably suggest that it would be best to simply walk away from the situation. And I really like this quote. It says, whereas the fool would argue that what is already dead cannot die. And we've heard this quite a bit. It's almost the motto of the Terra Luna Classic community that actually everybody else, even to this day, believes Luna Classic is done, and yet everybody that's inside it, even just reading this Medium article, being in the Discord, speaking to like-minded people about Terra Luna Classic, we know that not to be the case. Positive network growth while prohibitive of economic instability is the assumption that we can continue growing our network with stabilizing the current price volatility, encouraging increased staking and on-chain utility, then eventually the market will reward us. Again, think about it. We are in one of the most bearish markets in 2018, and we are trying to rebuild a completely collapsed blockchain. And you think about where the price is, you think about where the volume is, and ultimately what we're getting. It's really exciting to think about. To accomplish this feat, we will need to implement a host of new features that can enable us to establish capital controls, which allow entrepreneurs to create new features on one of the few truly community-driven networks in the crypto space. And I think that's never a true word has been said. Commodity tokens that can be utilized by its proof of origin commodity token will subject to special utility tax that will be split between the platforms to fund tranche concept that Alex has envisioned and the Serenade receipts as payment for utilizing various networks, ultimately supporting the tax, the burns, and getting rid of some of this supply. I think it's really important. It says, for partition pools concept to function for us to repeg USTC is imperative that partial swaps and eventually full swaps between Lunic and USTC are enabled with a 10 billion hard cap on the Lunic supply that ensures no one can swap in the Luna pool if the transaction would break the 10 billion hard cap set in proposal 3568. Again, another protocol that supports what we are trying to do. It takes us through a little bit around governance sanctions protocol tokens, and they would be akin to the community money, and they would start with a supply of 0, and they would enable shielding in such a way that they could only be capitulated by the native currency token Lunic, representing a debt to equity swap of sorts. So just important that we have that in there. Talks a little bit about remittance corridors, simply just regulated swap channels that are subject to throttling rolling averages measured by the ABS keeper. Their goal is to allow regulated flow of capital between various commodity tokens created on the Terra Classic network. And then finally, it talks about Alex, and given that it's still my belief that our many months of debating the merits of his ideas was always beneficial to both of us, even though we never really gained consensus on the matter of printing more Lunac. I feel that it would be pointless to go into further detail on the subject and believe his idea can be combined seamlessly with other features to provide a construction that is stronger and greater than the sum of its parts. So quite a lot to kind of go through there. I think ultimately we don't want to be minting Luna Classic. That's not the way we want to do it. We don't want to just print money in order to fix it. We know we've got a $10 billion debt to pay back. So whatever we mint or print, we're just going to end up paying that debt back. We need to build applications, which we've been talking about on this channel for a while. Build applications, continue the strength and growth of the community. And ultimately, as we start to evolve, think about it. We all wanted 1.2% burn tax. We didn't get it with Binance, but we did then get a 0.1% on spot on trading fees. Who knows what that evolves into? Who knows what a month down the line looks like? I think we are conscious about what we're doing, and the future for me is incredibly bright, and I think there'll be an adaptation of this concept from Zaradar, but I do think some of the main nuts and bolts of this are very, very exciting. But let me know in the comments down below what you think. Apologies, it is over an 11-minute video, my longest video to yet on Terra Luna Classic, but I do think it's important we understand it, and hopefully you got some value out of watching this video. And if you did, please leave a like on the video. It does support the channel and equally gets the video out to more people. And if you want to keep up to date with Terra Luna Classic, subscribe to the channel, and I'll catch you all in the next one.